Welcome back to AlgoBot, the channel where we take apart automated trading systems and study how they actually think. I'm your host here at AlgoBot, and today we're examining an expert advisor for MetaTrader 5 called Rank Some Momentum Shift. This one is built around a piece of classical statistics, the Wilcoxon Rank Some test, also known as the Mann-Whitney U, repurposed to detect the moment a market's drift quietly changes gear. By the end of this video, you'll understand how it ranks recent price returns against older ones, how it filters those signals with a baseline moving average, and how it manages risk with the average true range. Let's get started. So what does this expert advisor actually do? At its heart, Rank Some Momentum Shift is a drift regime detector. The idea is that a trend is born when the distribution of bar-to-bar returns quietly shifts upward or downward. In plain language, the market starts printing systematically larger or systematically smaller moves than it did a moment ago. Most simple tools try to spot this with an average, but a single unusually large spike bar can distort any average and produce a false reading. The rank sum approach sidesteps that problem entirely. Instead of measuring how big the returns are, it ranks them by order, so it detects a genuine location shift while shrugging off outliers. The strategy works by comparing two adjacent windows of returns. The older window represents the prior regime, and the most recent window represents the emerging regime. All of those returns are pooled together and average ranked, and the strategy then measures whether the recent group tends to sit higher or lower in the combined ranking. That comparison is standardized into a single z-score. A positive z-score means recent returns rank higher, hinting at an upward drift shift. A negative z-score means recent returns rank lower, hinting at a downward drift shift. Because a raw statistical signal can be noisy, the strategy adds a baseline exponential moving average as a light trend alignment filter. It only acts on an upward shift when price is above that baseline, and only acts on a downward shift when price is below it. So it joins the new regime rather than fighting a still dominant opposite trend. It trades a single symbol on a single time frame, whichever chart you attach it to. In terms of who might study it, this is an approach that will interest traders curious about non-parametric statistics, regime detection, and systematic, rules-based entries. Remember, this is educational information only, and it is not financial advice. Let's walk through the exact logic step by step. The expert advisor only evaluates on a completed bar, checking once per new bar so that nothing repaints or changes after the fact. On each new bar, it looks back over the most recent returns and splits them into two equal windows. The size of each window is set by the window parameter, which defaults to 20, so the total sample compared is 40 returns. The first half is the older, prior regime, and the second half is the recent, emerging regime. Every return in that combined sample is average ranked from smallest to largest, and ties are handled by sharing the average rank. The strategy then sums the ranks belonging to the recent group, converts that into the Mann-Whitney U statistic, and standardizes it into a z-score by subtracting its expected value and dividing by its standard deviation. That single number is the engine of the whole system. When it is strongly positive, the recent returns are ranking higher than the older ones, describing an upward drift shift. When it is strongly negative, the recent returns are ranking lower, describing a downward drift shift. Now for entries, and the crucial detail here is that the strategy acts on the transition, not the state. It watches for the z-score crossing up through the positive threshold, which defaults to 1.6. A long signal is generated when that fresh upward crossing occurs, and the closing price is above the baseline exponential moving average, whose period defaults to 50. The mirror image applies for shorts. A short signal is generated when the z-score crosses down through the negative threshold, and the closing price is below that same baseline. The rules are distinct and symmetric. Position handling is straightforward. If a fresh opposite signal appears while a trade is open, the strategy closes the existing position and reverses into the new direction. If it already holds a position on the same side, it simply stands aside rather than stacking. Finally, risk. Every position is protected by a stop loss and a take profit derived from the average true range, using a look-back that defaults to 14. The stop is placed a set number of ATRs from entry, defaulting to 2, and the take profit a larger number of ATRs away, defaulting to 3. That gives a reward-to-risk ratio of 3 to 2, and both levels are attached at the moment the order is sent. Trading always involves risk, and losing trades will occur. Let's read through the meta-editor code on screen. At the top are the input parameters. Windows sets the size of each return window, defaulting to 20, so the total sample is 40. ZThreshold is the z-score the rank sum shift must clear to count as significant, defaulting to 1.6. Baseline period is the exponential moving average used for trend alignment. ATR period, AtrStopMult, and AtrTargetMult control the average true range risk sizing, and lots and magic set the trade volume and the identifier. Below that is the signal core. The variable cross-up is true only when the previous z-score was at or below the positive threshold, and the current z-score is now above it, a fresh upward crossing. The variable cross-down is the mirror, a fresh downward crossing of the negative threshold. Then long signal combines that upward crossing with the requirement that the close is above the baseline moving average, while short signal combines the downward crossing with the close being below the baseline. Now look at the two order blocks. On the buy side, the entry price is read from the ask. The stop loss is placed AtrStopMult times the ATR below that price. The take profit is AtrTargetMult times the ATR above it, and the position opens with trade.buy. On the sell side, everything is reflected. The price is read from the bid. The stop loss sits AtrStopMult ATRs above entry. The take profit sits AtrTargetMult ATRs below, and trade.sell opens the position. Both sides are symmetric, and each carries its own protective stop and target from the very first tick. Let's walk through this illustration candle by candle. On the price chart, the blue line is the baseline exponential moving average, our trend alignment filter. In the panel underneath, the gold line is the rank sum z-score, with a dashed green band at positive 1.6 and a dashed red band at negative 1.6. Those bands are the significance thresholds the shift has to clear. Look at the first three candles. Price is drifting sideways to slightly lower, and it's hovering around the baseline moving average. In the panel, the z-score is soft and negative, dipping toward the lower band but never decisively crossing it, and price isn't cleanly below the baseline either, so no short condition is satisfied. The market is simply undecided here. On the fourth candle, something changes. Price prints a firm bullish bar that closes above the baseline moving average. In the panel, the recent returns have started ranking systematically higher than the older ones, and the z-score jumps from near zero up through the green threshold to almost 2. That is a fresh upward crossing, and with price above the baseline, both long conditions are met. You can see the buy entry marker appear on this candle. At that same moment, the stop loss is placed a set multiple of the average true range below entry, and the take profit a larger multiple above, giving a reward to risk of 3-2. The fifth and sixth candles confirm the shift. Price rallies steadily, each close pushing higher, and the z-score stays elevated above the green band around 2.1 to 2.3. The upward drift regime is holding, exactly the environment this entry was designed to join. By the seventh candle, price reaches the upside take profit target, and the take profit marker prints. The long idea has played out to its planned exit. Notice the z-score already starting to fade as the buying pressure cools. Now watch the transition. On the 8th and 9th candles, price stalls near the highs, rolls over, and slips back toward the baseline. The z-score falls back through zero into negative territory as recent returns begin ranking lower. On the 10th candle, price prints a firm bearish bar that closes below the baseline moving average. In the panel, the z-score crosses down through the red threshold to roughly negative 1.9. That is a fresh downward crossing, and with price below the baseline, both short conditions are met. The sell entry marker appears. Had a long position still been open, this fresh opposite signal would have closed it and reversed the direction. The stop loss now sits above entry and the take profit below, again at that same ATR-based distance. The 11th and 12th candles extend the decline, and the z-score stays pinned below the red band near -2, confirming the downward drift regime. Finally, on the 13th candle, price reaches the downside take profit target and the second take profit marker prints. That is the full cycle, a long taken on a fresh upward rank shift aligned with the trend, and a short taken on a fresh downward shift. Keep in mind this is an idealized illustration. In real markets, shifts can fail and reverse, which is precisely why every position carries a predefined stop. That brings us to the end of our look at rank sum momentum shift. We covered how it uses the Wilcoxon rank sum test to compare recent returns against older ones by rank rather than by size, how it standardizes that comparison into a z-score, and how it acts only on a fresh crossing of the threshold when price agrees with the baseline moving average. We also walk through its symmetric long and short rules and its average true range stops and targets. Everything here is educational information only, and it is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are part of it. If you found this breakdown useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which system to study next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.